Rachel Reeves, the UK Chancellor, is making headlines with reports that she might raise capital gains tax to 39%. Is this a welcomed move to tax the rich? Or a bad move for growth in the UK, potentially weakening the economy? Please remember to like, subscribe, and turn on bell notifications to support our channel. We appreciate each and every one of you. Rishi Sunak pays 28% tax while working Brits pay up to 40%. Is this right? First, let's get some context. Capital gains tax is applied to profits made from selling assets like stocks, property, or businesses. Currently, the rates range from 10% to 28%, depending on the asset and income level. Reeves is facing mounting pressure to address what is now suggested to be a significant £25 billion gap in the UK budget, and increasing capital gains tax is one step closer to closing that gap. Recent reports suggest Reeves is considering a substantial increase in capital gains tax rates, potentially as high as 39%. This would be a major shift from the current rates and would make the UK's capital gains tax among the highest in the developed world. If implemented, this change could primarily impact anyone with investments or savings. So what about the economic impact? Critics suggest raising capital gains tax might lead to reduced investment, as investors seek countries with more favourable tax conditions. This could in turn affect job creation and economic growth. Politically, this proposal puts Reeves in a tricky position. Labour has pledged not to raise taxes on working people, so this move might be seen as contradictory to that promise. Critics argue that it risks targeting voters who are concerned about their savings and investments. Experts, including those from the Institute for Fiscal Studies, have weighed in on this topic. Some suggest that while reforming capital gains tax could raise revenue, it's essential to do so in a way that doesn't discourage investment or economic growth. There are calls for a more balanced approach, one that simplifies the tax system while making it fairer and more growth-friendly, rather than resorting to steep tax hikes. Reactions from the political landscape have been mixed. Critics, especially from opposition parties, have seized this opportunity to question Labour's economic strategy. Public opinion on this issue is also divided. Many Brits support the idea of raising capital gains tax as a way to ensure that the wealthy pay their fair share, seeing it as a tool to reduce inequality and fund essential public services. However, others worry about its potential impact on investment and economic growth. Rachel Reeves' proposed increase in capital gains tax to 39% is a bold move aimed at addressing the budget gap, but it comes with significant risks and political challenges. What do you think? Is this a smart economic decision, or could it do more harm than good? Let us know in the comments. As always, stay informed, stay engaged, and make sure that your voice is heard.